Have you seen what's going on in the stock market? This week, April 12th to 18th, 2025, was like a financial soap opera. U.S. China tariffs hit 145%, stocks tanked, then rallied, and everyone's worried about prices going through the roof. Oh, and Trump's talking about firing the Fed's Jerome Powell. Yeah, it's a lot. Whether you're just dipping your toes into investing or you've been trading for years, I'm here to break it all down. Let's figure out what's happening, why it's messing with everyone, and what you can do about it. Imagine the markets like a boat in a storm. Before this week even started, it was already rocking. Trump's big tariff announcement on April 2nd set off alarm bells. 10% tariffs in most countries, 54% on China. Markets took a hit. The S&P 500 was down 5%, the Dow 5.5%, and the Nasdaq a rough 13.4%. Last week, a 90-day tariff pause sparked a crazy 9.5% S&P 500 rally in one day. Wild, right? But China's 125% tariffs on US goods brought everyone back to reality. This week, things got even messier. Trump jacked up US tariffs on China to 145%, saying Beijing was being disrespectful. China fired back with 145% tariffs, and suddenly everyone's freaking out about a global recession. Goldman Sachs say there's a 35% chance the US economy tanks, and JP Morgan's warning of a 40% global downturn. Plus, inflation expectations hit 6.7%, the highest since 1981, and the Fed's not budging on its 5.5% rates. It's like the market's screaming, what's next? So picture this, you're an investor, maybe with a few stocks or a 401k, and this week's like a financial earthquake. Tariffs drove everything, and the impact's huge. For you, for businesses, for everyone buying stuff. Let me walk you through what happened and why it's shaking things up. Early in the week, markets got slammed. The S&P 500 fell 2.3%, the Dow dropped 800 points, and the Nasdaq slid 3.1% as Trump's 145% China tariffs kicked in. China's 145% tariffs made US goods way too pricey over there, crushing exporters like farmers and manufacturers. Tech stocks, think Nvidia, Qualcomm, dropped over 5% because China's a big player in chip supply chains. If you're new to this, tariffs are like taxes on imports and exports. They make everything more expensive, which hurts company profits and stock prices. Pros also noticed Van Eck Semiconductor ETF fall 7%, a red flag for tech investors. But here's where it gets real for everyone. Retailers like Hobby Lobby stopped shipping from China, saying clothes and toys could soon cost double. The Yale Budget Lab crunched the numbers. Tariffs might add $4,900 a year to household budgets, 65% more for clothes, 87% for shoes. Small businesses like furniture or toy importers are in trouble. Some are canceling orders or even closing. If you own consumer stocks like Target or Walmart, you felt this, because higher prices could mean fewer sales, even your grocery bill's at risk. China's 90% cut on US oil imports includes soybeans, so food prices might climb. Midweek there was a flicker of hope. Rumors of US-Japan trade talks and Delta Airlines' strong earnings pushed the S&P 500 up 1.5%, the Dow 400 points, and the Nasdaq 1.8%. Trump exempted smartphones and chips from China tariffs, so Apple and chipmakers bounced back. But it didn't last. Europe's €50 billion tariff shield to protect businesses showed everyone scared. Goldman Sachs said the S&P 500's lost $5.8 trillion since April 2nd. New investors might have thought, time to buy, but pros knew volatility was still running the show. Then Thursday was a disaster. China's 145% tariffs sent markets crashing. The S&P 500 was down 3.2%, the Dow off 1,200 points, Nasdaq down 4%, tech like Micron fell over 10% as supply chain fears grew. The IMF said U.S. China trade fights could tank global growth. Businesses hit pause. Freight bookings dropped 41%, meaning goods aren't moving. That's layoffs, closed factories, and higher prices. For investors, this was a gut check. Tariffs don't just hit your stocks, they mess with the whole economy. Friday gave a small breather. The S&P 500 rose 1.2%, the Dow gained 500 points, and the Nasdaq added 1.5%. Thanks to JP Morgan's solid earnings and Trump hinting at Japan trade talks. But the week was rough. The S&P 500 was down 2.6%, the Dow off 2%, and Nasdaq down 3.5%. Year to date is even uglier. The Dow is down 7.5%, the S&P 500 11.4%, and the Nasdaq is down 16.9%. Globally, Japan's Nikkei fell 2%. Hong Kong's Hang Seng tanked 13% at one point, and China's facing job losses for 10 to 20 million workers. This isn't just about stocks, it's about your wallet, your job, and the world. Okay, let's talk about the drama everyone's been buzzing about. Trump wants to fire Federal Reserve Chair Jerome Powell. Yeah, the guy running the nation's money policy. Trump's been vocal, posting on social media that Powell's termination cannot come fast enough because he's not cutting interest rates. So, can Trump actually do this, and what would it mean? Powell's term as Fed Chair runs until May 2026, and the Federal Reserve Act is supposed to be independent from politics. The law says the president can only fire the Fed governors for cause, like misconduct or serious screw-ups, not just policy disagreements. Trump's mad because Powell's keeping rates between 4.25 and 4.5%, saying tariffs could spike inflation, which clashes with Trump's push for lower rates to boost the economy. Legal experts say firing Powell for that isn't cause, it's a gray area, and no president's ever tried it. Powell even said, "The law doesn't let Trump fire me. If Trump tries, it'll likely end up in court, maybe Supreme Court." Some say he could demote Powell, but keep him on the Fed's board, but that's messy and untested. Treasury Secretary Scott Bessent is warning it could tank markets, and experts agree. Messing with the Fed's independence could scare investors, spike inflation, and shake global trust in the US dollar. Imagine markets already jittery from tariffs, then add a Fed fight. Stocks could crash and your investments from 401ks to crypto could take a serious hit. Even Trump's team is backing off, saying they might wait out Powell's term. And for you this matters, because the Fed controls the rates that affect your mortgage, car loans, stock returns. If Trump shakes up the Fed, it could mean more volatility and higher costs. So why should you care about this week? Tariffs at 145% are like a wrecking ball. They're not just numbers, they're hiking your bills and threatening jobs. The S&P 500's lost $5.8 trillion since April 2nd. In recession odds are at 45%. Households could pay $4,900 more a year, close up 65%. Cars $7,400 pricier. Small businesses are shutting down, and big ones like Apple are scrambling with supply chain chaos. Globally, it's rough. China's GDP is cut to 4%, risking millions of jobs. Europe's furloughing workers, and India's exports are down $66 billion. Gold's at $3,226, and Bitcoin's holding at $79,000, but most stocks are struggling. Inflation at 6.7% means the Fed's stuck, and a Powell fight could make it worse. This week's a reminder, trade wars and policy fights hit your wallet, even when you're not investing. Alright, let's wrap this up with some tips to handle this mess. First, don't freak out. Selling when stocks are down locks in losses. Wednesday's rally showed the markets can bounce back. Second, mix up your investments. Tech and consumer stocks got hit hard, but healthcare, utilities, and gold did okay. If you're starting out, try ETFs that cover loads of sectors. If you're advanced, maybe add some gold or bonds. Third, keep an eye on the data, not the headlines, like bank earnings, CPI inflation data. If inflation jumps, markets could get wilder. Dive into earnings reports and think long term. Trade wars pass, but a solid plan lasts. Maybe chat with a financial advisor before making any major decisions, or check out the website in the description below for weekly market updates, stock analyses, and much more. Phew, that was a lot, right? Tariffs at 145%, markets flipping out, and Trump versus Powell? It's a wild time to be an investor. If this update helped you get a handle on things, hit the like button and subscribe for more market talks. Tell me in the comments, how are you playing this trade war? I'm all ears. For more on dodging market chaos, check out the video on screen right here. And thanks for hanging out. I'll catch you next time for another market deep dive. Stay curious, and as always, happy investing.